Hi, did you know that you have unique information hidden inside your brain that can let you take the lemmings' money in the market? You sure do. What kind of information? It is emotional information about how you and others react to violent market extremes. How can you access it? It's all in my last book, The Advanced Wealth Investor. Well, I still see you shaking your head. That's a big claim. Do I have proof that it works? Sure. Actually, I have three proofs. Here is the first one. On February 25, the Iran war was about to start. All big money runners that I know on Bay Street and Wall Street were running scared. They are selling stocks and hoarding cash, hedging for the coming market crash. I even felt myself going jittery inside with all my experience because maybe a crash was coming. Should I sell? So I checked my inner jitters against similar jitters I felt in the past. Then, instead of selling, I bought and posted a clip saying buy on the sound of war guns. In other words, my own inner jitters told me that many lemmings in the market feel the same fear, so I shouldn't be a lemming to enjoy them. Rather, I should be buying from them. And so should you. Hence the YouTube clip. Now why? Why would I post this clip since my method is physical sleuthing? Two reasons. The first reason, because in my 50 plus years experience, I know that you always buy when wars start. Always, no exception. You don't believe me? Here is a partial list of wars. The 1973 Yom Kippur War and the oil shock was exact market bottom. Next, 1982, the Lebanon War, the market bottom within 2 weeks. Next, 1991, the first Gulf War, the market bottom on the same day the war started, January 15, 1991, when the first Tomahawk missiles left the destroyers. Next war, March 2003, the second Gulf War, the market bottom the same month. Then 2023, the recent Gaza war, it bottomed the same month. And now 2026, the Iran war, the same jitters inside me, testifying to the lemmings being jittery too. Why I posted the clip. Don't you be a lemming too? Buy. At the time of that clip, February 25 this year, the S&P was at 6,946. The Fear and Greed Index that shows the big money runners panic or euphoria, he was at 35. Fear and jitters. Fear in the onset of war, great jitters. Good enough for me. Still, the war started only a month later, and the S&P 500 by then plunged a little bit further, about 7.5% more, to 6,300 and change. On that day, the Fear and Greed Index fell to a floor-wetting panic level of 9 out of 100, as low as it was on the previous market bottom of April 2025, the year before. Which brings me to the second proof that my method works. Exactly a year ago, in April 2025, I also put up a clip telling you not to be a lemming and buy from them. Remember it? Look it up. It says don't be a lemming. And where is the S&P today? It's roaring back well above 7,000, well above 7,100. Higher certainly than my Feb 25 clip, and it's rising fast with the Fear and Greed Index now at a hoppy 69. The market may even be saying to be melting up. Is it? It might, as panicky money runners try to catch up to it so they don't lose their job by lagging the market. In simple language, the lemmings' collective fear is rocket fuel and the cash they have on the sideline to the market rise. Now you may still ask, how did I pinpoint both market bottoms so well? Was it just the Fear and Greed Index level? One indicator to hang it all on? No, or rather, certainly not only. The other reason is my internal jitters, my own emotional memory that extends more than 50 years back to 1975 when I did my first trade in between the 2 years of business school. But you may still say some other lemmings have more than 50 years experience, yet they didn't sell. How come? Meaning, what do sleuth investors like me have and big money running lemmings don't have? And the answer is the experience that they have is usually numerical experience. And the real experience that counts is of a different kind, not numbers and charts, but an emotional memory of how my own innards, my own guts reacted to the market's violent move at the moment. And what is that memory? It's an emotional memory. And it's similar to muscle memory that comes out of actually doing something dangerous and scary many times and letting your brain and your body retain the danger's physical impact on you more than intellectually, but emotionally, in your fiber. In fact, your past interaction with the world in violent moments becomes a part of you. Like which kind of interaction? Well, like riding a fast motorbike down a twisting road, making split-second decision at high speed, or boxing on the ring with a wily opponent where both of you get hit, yet you must continue to fight despite being hit and despite what you felt at the moment. This kind of memory is different than just numbers on a table or lines on a graph that most investors look at. And it also gets stored by a different part of your brain. Not the part where you store the multiplication table or the ABC or chart patterns or the solution to quadratic equations. No, all these are rational memories. Emotional memory is different. The emotional record of your own past interaction with danger lives in different parts of your brain. So you also can access such memories differently than lemmings do. Not by analysis and computation, but by recalling the emotion, your emotion, and comparing it to your emotion today. Can anyone do it? Not anyone. Certainly not if all you do is stare at the screen all day and think that stocks are only lines and numbers on the screen with patterns that tell you where they'll go next by the moving average. No. Just like you cannot learn how to box or ride a fast bike or fly an aerodynamic plane by looking at a diagram or a chart, so you can't take other people's money in the emotional market via cold analysis, but only via an innate understanding of their panic. And this you do by letting yourself feel it too, and remember the previous time you felt it too, and what the market did then, and what you did. For this, you need to access your own past emotion. This is the key to understanding market turning point. But where is this emotional information stored in your brain? Well, regular information is stored in the cortex 6 layers. It's a sort of biological neural net. It stores categorized feelings like big, small, high, low, small, thin, thick. That's where you stored the categorized memories. But the brain as a whole is not at the neural net. There are other parts of it where your experience of danger and the resulting emotions are stored. These have no measure except what you felt. See my book, The Advanced Investor, about this and how to retrieve that information in detail. But why should even try, you may say? Why not just buy value, follow charts, and act without emotions? Because at extreme points in the market's life, your own emotional turmoil will override all this fine theory, and as smart as you are, you may find yourself shaking with fear, joining the lemmings, and pressing the sell button too, which is what I too felt when the panic in the market reached extreme, both last year and this year. But at such points, my emotional memory, serving also as an indicator of the lemming's emotion, rescued me and told me to do the opposite. That's when I issued the 2 bottom-picking YouTube clips, based on my own past emotional memory, which somehow dovetail with the fear and greed index. And once you understand that, and you can start tracking your own reaction to market violence, you too can escape being a lemming and start taking their money. Okay, I gave you 2 proofs that this works. The first is my lemming memo of last year. The second is my similar memo of April this year. What's the third proof? It is the amazing case of Tony Bennett, who despite having terminal Alzheimer memory loss, suddenly got all his memories back in the middle of his farewell concert with Lady Gaga. How was it possible? With the cortex as rotten as Swiss cheese. What happened was the extreme effusion of love from the audience was just the right emotional trigger to bring Tony's memories back from wherever they have been stored. And he sang as if he was a young man again, with memories all the way back and humor all the way back. But back from where did the memory come? Not back from the cortex, which was gone, but from Tony's hippocampus, which is the part of the brain when memories were backed, keyed by emotion. Now, I am sure your own cortex works very well. It may even have degrees, MBA, CFA, engineering, legal degree, plus experience, and has full access to financial databases and numbers and memory. But remember, the lemmings have these too, but it's all in their cortex. Where you have an edge is in your hippocampus, where your own market experience is stored emotionally. Your emotional experience at the extreme point and their impact on you, and compare it to the impact at the present. The lemmings whose money you aim to take do not know how to access these key emotions, and so all tumble off the market cliff together in a floor-wetting panic, and they sell. Like in April 2025 and March 2026. These two YouTube clips and Tony Bennett's case should serve you as proofs that what I'm talking about really works. If you learn how to access your own key emotions at market turns, you too can take the lemmings' money. But how to develop such emotional memory and access it? Read my book, Advanced with Investor, and see for yourself. There are even exercises for you to go through to sharpen your lemmings' money-taking skills. That's all for today. Please let me know if you like it, and if you do, subscribe to the channel and tell all your friends and subscribers who they subscribe to. I'll see you next time. And meantime, thank you very much for watching.